Hello and welcome to another episode of the Uranium Market Minute. Today is Tuesday, April 5th, and this is episode number 99. My name is Justin Huhn. I'm your host. I'm the founder and publisher of the Uranium Insider Pro Newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you very much for tuning in. As always, nothing in this video is intended to be investing advice. I'm not your financial advisor, and this is not financial advice. Please always do your own due diligence when it comes to investing, and always take responsibility for your own choices. All right, it's good to be back. I had a very nice short vacation with my family. We visited the desert of the Southwest of the US. Absolutely spectacular. It's my favorite place in the world. I go there a couple of times a year, and this was no exception. It was just unbelievably beautiful and a very needed break away, even though, of course, the market never sleeps. So never really feel like entirely on vacation. But as far as vacations go, this was much needed and very rejuvenating, very inspiring just to see the beauty of that place. So, but it's good to be back. The details I'm going to give you in the scoreboard today will be for 6 days of data, including the spot price movement, the spot flows, the ETF flows, etc. But it's been a very eventful week for uranium. Obviously, the spot price continues to move up very sharply. There was a fantastic interview done with Grant Isaac from Cameco. I'm going to put a link in the show notes for today in the description for the video below. And if you haven't watched it, I highly suggest it. He can barely sit still in his chair. He's very excited, as he likely should be, all things considered. There is just absolutely huge moves across the entire fuel cycle that are happening. The month-end prices that were reported by TradeTech, by UXC, the two prominent nuclear fuel consultants, are just showing huge moves, over 60% move in conversion. Just massive moves across the fuel cycle. Enrichment is up, UF6 is up, SWU is up, the spot price of uranium is up, the long-term price of uranium is up, the midterm price of uranium is up. All across the fuel cycle, everything is moving up, and there's a lot of self-sanctioning that's going on, and that's what I'm going to talk about in the mailbag section today. But before we do that, why don't we go ahead and run through the daily scoreboard here. All right, so again, this is 6 days of data, and the spot price now is sitting at $61.25 a pound, up over $3 since my last uranium market minute, essentially over the past week, a little bit over a week. It's over $1.50 up today, $61.25 a pound mid-market. It is now sitting at 11-year recovery highs. This is 11-year high for the spot price of uranium. And of course, so much has changed in those 11 years. Inflation is seriously just one element of that. $60 uranium today, 11 years ago, was probably something like $30 uranium, with everything that's going on right now with supply chains and labor shortages and actual inflation that pretty much every country, every major country in the world is seeing right now. So we have a long ways to go with this. And that incentive price that we've talked about for years, 2016, 2017, 2018, kind of the early days of this, is a very contrarian investment. That incentive price essentially is the price of the projects that are sort of on the margins of cost. These are the higher cost projects. These are the projects that need to come online at some point this decade in order to balance out the supply deficit that we currently have, and that is also projected out towards the middle and the end of this decade. Now, that price around that time, in the late 20-teens, we were still shooting for $55 to $65 a pound uranium. We can throw that entirely out the window. That marginal cost of production now easily into the 80s, if not the 90s. And we are going so much higher for this. I can't even tell you. So sitting at $61.25 a pound, yes. Did we think the equities would be much higher at this price? Yes, we did. What has happened since then? Well, Sprott obviously has happened and has purchased way more uranium than anybody expected, way faster. And that, of course, has been a very bullish thing for the investment thesis in general. But the fact that it's happened so fast, and the fact that it has happened during this period of time where there's kind of an overall risk-off environment in the broad markets, there's geopolitical tensions, there's actual kinetic war going on. It's a very uneasy time, just generally speaking, in society, in many countries across the world, and of course in markets. So while this movement is happening in the spot price, the equities are, while they've done very well, I mean, we've still outperformed the broad market substantially over the past 2 years. But I think that a lot of people in the space expected a bigger move. And in my opinion, that move is coming. So we're buyers here. But with all of that said, we will cover that a bit more in the charts today, but let's keep going through the scoreboard. Over the last 6 trading sessions, SPUT raised a further $84.8 million. They purchased another 800,000 pounds of uranium. They've now purchased 53.7 million. No, sorry, they hold 53.7 million pounds. Year to date, SPUT has bought 12.4 million pounds of uranium. That's the first 3 months of the year. Absolutely huge numbers coming from SPUT. They have raised 698.8 million in new capital this year alone, almost $700 million in Q1 and 12.4 million pounds purchased. Unbelievable. Yesterday, they closed at a slight premium to NAV at 1.1%. Trust did trade down today. The market action was pretty weak today overall. So they probably didn't raise a whole lot of extra money today, but it did spike up in the first hour of trading like most equities in the space. So perhaps they raised a bit. They came into the day sitting on 88 million in cash. They give themselves a little bit of a reserve. They have enough to buy almost another 1 million pounds of uranium here and still have money in the bank. Since their ATM went live in August of last year, they have raised $1.7 billion. Absolutely huge. All right, turning to the sector equity ETFs. Over the last 6 trading sessions, URA's outstanding shares increased by another 1.17 million shares. URNM reported no change. Of course, while I was out, we did go through the URNM rebalance. In my opinion, this was one of the less painful rebalances that we've gone through. URA's rebalance at the end of January, early February obviously hurt. That was the nail in the coffin after a couple of months of weak trading. Now the sector is a bit stronger. URNM added 3 or 4 small cap names, did a bit of trimming here and there. Nothing major with that, but it did add a little bit of choppiness to the market at the end of the month. But they have not issued any new shares over the past week. URA continues to issue a lot of new shares. Money continues to flow into that ETF. And of course, as URA has the deepest options market across the uranium space, when people take bullish directional options trades, the market maker has to hedge off selling that option by buying common shares. And so that's why we see more share issuance in URA, in our opinion. Since January 1st, URA has increased their outstanding share count by 23.5 million, URNM by 2.9 million. These inflows year to date have given rise to 600 million in mandated buying. So the flywheel effect is in full effect. Let's go ahead and take a look at the charts here. Starting off as usual with URA, we've seen a bit of weak action on declining volume over the past week or so. Shares are trading down, volume is trending down. Today, we actually saw a pretty nasty looking reversal candle for URA and for most equities in the space. Now, what happened? You can look at the volume bar. The volume bar is nothing to shake a stick out. Why don't we go ahead and look at the hourly chart for URA? All of that volume came in the first hour. And so it looks to me like somebody came in the first hour of trading and bought a heavy amount of URA that added to a heavy amount of buying of the equities across the space. And then it traded off throughout the day as the broad market weakened as well. Not really a whole lot going on here. Overall, still bullish chart. That is a pretty ugly reversal candle. We'll have to see how the rest of the week plays out. Spot price is trending up substantially. So hopefully that adds some support to the space. But generally speaking, it looks to me like the uranium space is looking for some new money to come in. And in my opinion, that will happen when we see larger and more sustained moves in the spot price. We've been sitting around that mid to high 50s for at least a few weeks now. Looking at the spot physical uranium trust, of course, we were at a pretty significant premium to NAV when we peaked out here above $19, and that was the 10th of March. So for almost a month, we've been trending in this mid 50s to high 50s range. We've now broken through the $60 mark. The ask is sitting at $62 a pound right now, and it's showing no signs of reversing. This is an absolutely gorgeous chart. The trend is clearly up. Look at those all 3 moving averages just pointing towards the sky. Beautiful, beautiful. Room to run both in RSI and MACD. This is going to continue to move higher. Cameco has been leading the sector for the past couple of months here. A lot of that likely has to do with increased attention coming into Cameco due to the geopolitical situation in the Ukraine. Western utilities likely looking west for sourcing new pounds of uranium. And Cameco is going to be one of the main beneficiaries of that as a current producer in the West. Of course, there are others. You've got BHP with the Libbey Dam. They've never had a problem selling their uranium. They do sell through contracts, but also into the spot market. But of course, the big players would be Russia in terms of conversion and enrichment, small in the U3O8 market. But of course, Kazakhstan is kind of in a gray area right now. They clearly are not being primarily sanctioned by anyone. I mean, neither is Russia in terms of uranium, right? I'm going to talk about this in the mailbag section a bit more, but Kazakhstan seems to be somewhat associated, not only due to the proximity to Russia, sharing a border, having Russia help them out in January with the unrest that they experienced there, but also their primary shipping route goes through the port of St. Petersburg in Russia. And so it's created an interesting situation. And of course, just to reiterate, Cameco looks like it's been a big beneficiary of that. We have seen not only kind of a double top rejection here, but we've seen multiple reversal candles in a row. Along with that, we've got, just about a similar repeat high, but RSI is trending down, slight minimal negative convergence, nothing too major here. But obviously, this one has some consolidating to do after a really big move. It's up 50% since the January lows. So this has had a very strong move. And of course, even with the spot price moving up substantially, pretty natural to see some pullbacks across the sector, see if we see another bit of consolidation period across the sector before we make another leg higher, assuming the spot price continues to trend up, which of course, I believe that it will. All right, so mailbag section. Yesterday morning, we released our April newsletter. This is 35 plus pages. We go crazy deep into the macro. We cover all the companies that we own and recommend. And there's an interesting section that we added to this month's newsletter that we basically covered a lot of the terminology, kind of like a cheat sheet for terminology within the uranium space. Okay, so there's a lot of terms being thrown around right now, and we covered all of those in the newsletter. The overfeeding, the underfeeding, we went deep into what that means. I have covered that in brief on this channel, but of course in the newsletter, we go much deeper into these sorts of things. And in the members webinars, which are coming up, the April one is coming up in 2 weeks from now, mid-month. We haven't announced the date yet or the special guest yet, but that is coming, and we're going to go deep into what overfeeding means, because that is affecting the overall fuel cycle and has knock-on effects for U3O8 that are coming. So what are one of these terms that we added to this kind of cheat sheet, this terminology cheat sheet that I want to focus on here is self-sanctioning. Now, what are we looking at here? Across the fuel cycle, especially when we're talking about Western utilities, all right, so that's North America, that's Europe, and even to some extent, some Asian utilities might even be considered Western utilities due to their political affiliations. Okay, so the largest uranium markets, the largest nuclear markets in purchase of uranium, as a single nation would be the United States. But of course, the EU is a huge buyer of uranium and a very large market for nuclear energy. So what are we seeing? Are we seeing actual sanctioning by any of these countries or the EU blocking uranium imports from Russia? No. Now, there are bills being proposed. There's a Senate bill, there's a House bill, both being proposed right now in the United States to ban the importation of all Russian uranium products, okay? Whether or not that bill is going to pass both the House and the Senate, either of those bills, maybe they'll combine into one bill. They need to pass both of those. They need the president's signature, and then they need to be enacted. That may or may not happen, okay? Now, are we seeing Russia actually block the exports of uranium to the West? No. So we're not actually seeing official sanctions in either direction, but what are we seeing? We're seeing huge moves in the fuel cycle. What is happening? Self-sanctioning is happening. The utilities are choosing on their own volition to avoid buying from Russia. They're seeking out pounds elsewhere. Now, with Russian underfeeding, Russian enrichment, which is 43% of global capacity, Russian conversion, 38% of global capacity. Now, conversion was already the bottleneck. So what does that mean? Long story short, enrichment capacity is insufficient in the West to match demand from the West. So while the West is the largest consumer of uranium, the largest producer of nuclear energy, they don't have the conversion or enrichment production to match that demand. Of course, utilities, generally speaking, are sitting on relatively robust inventories. In the US, that's around 2 years on average. In the EU, that's at least 3 years. So it isn't an emergency in terms of actual ability to produce energy because Russian enrichment conversion will be cut off. But it is creating effects in the fuel cycle already. So self-sanctioning, that is what is happening right now in the markets. Utilities are voluntarily seeking pounds elsewhere, and that is having big impacts on the fuel cycle. And we always see U3O8 as the last mover. What did we see almost 3 years ago? SWU bottomed out. I mean, it had been falling precipitously for years as U3O8 went through these seasonal recoveries in 2016, 2017, 2018. SWU kept falling. SWU stands for Separative Work Unit. It is the cost of enrichment. Very intelligent players in the space were not bullish on the recovery for U3O8 until they saw SWU bottom and turn around. Now, since it bottomed, it has been moving up almost in a straight line. Well, what happened in March? It jumped by, what was it? Like 40% in March, up huge. It jumped from the low 60s up to $80 SWU. Just huge, absolutely huge numbers coming across the fuel cycle. And what happens is the front end of the fuel cycle, or the fuel cycle elements that are closest to fabricated fuel, the end of the fuel cycle, utilities will buy that up first. Why? Because they don't have to wait for material to run through the fuel cycle, especially because conversion is the bottleneck. So if a utility is like, oh shoot, I need some fuel 2 years from now, if I buy U3O8, then I got to go through this conversion bottleneck, then I got to find enrichment that's not coming from Russia, then I have to have fuel fabricated not from Russia, and then hopefully I'll get my fuel on time. Well, that doesn't work, okay? If you need fuel in 2 or 3 years, you're going to go and buy conversion, you're going to buy UF6, and especially if you can, you're going to be buying enrichment. So if you have U3O8, if you have UF6 in your inventory and is not yet enriched, you're going to go and you're going to buy SWU, okay? You're going to pay for enrichment. But we're seeing big numbers, huge jumps across the fuel cycle. What happens is that demand that happens first in enrichment, then in UF6, then in conversion, then in U3O8. It's happening precisely how we expected it to happen. The demand shock for U3O8 is coming. We're seeing the early signs of it. We have seen nothing yet. It's coming. We are positioned for it. We're excited about it. Of course, given the circumstances, it's difficult to celebrate that, but it's out of our control. We did not ask for this war. This was a market that was ripe for being disrupted, and that disruption is here. So I'm going to leave you with that. Very exciting time to be invested in uranium. I'm really looking forward to this next quarter in the space here. All right, tomorrow is episode 100. I don't have anything special planned, but it is kind of a benchmark. Thank you so much for listening. Really do appreciate you guys. My apologies for the break, but it was much needed. I feel rested. I feel inspired. I feel invigorated. You have to take a break and sharpen the saw once in a while. So if you do appreciate these videos, if you haven't already, please subscribe to the channel, like this video, share it around, hit the notification bell, and you will be notified whenever we publish a new episode, which is almost every day. And again, if you are not a member for Uranium Insider Pro, anytime you join, you have access to all of our previous content. So if you were to join today or next week, you get access to the newsletter that we just put out yesterday morning, which in my opinion is very thorough in explaining exactly what's going on here. And that fundamental knowledge of what's happening in the sector is crucial to be able to stomach the volatility and hang on for the ride that is coming. All right, take care. We will see you tomorrow. Be well. Cheers.